My name's Alan Carter. I'm the CEO and founder of Cabral Gold. We have an advanced gold exploration project with resources of about 1.2 million ounces in northern Brazil. We're right next door to a big major new mine development, a $500 million project that's being developed by G Mining. We have a whole district which is next door, and we're in the process of doing a pre-feasibility study on the oxide material at Cuiú Cuiú with a view to making construction decision early next year.
You are, and that's why we're talking. I think the market's waiting to see, your shareholders are waiting to see, I'm waiting to see how you advance that oxide project through 1.2 million ounces is not to be sniffed at, but you need to fund it. You've done a deal with a Cisco to bring in some Cisco Gold Royalties to bring in some money. What's that going to do? Well, tell us about the transaction, the deal first of all, and what you're going to be doing with the money.
Yeah, Matt, we announced a deal with the Cisco Royalties in mid-July or early July rather, and the deal with the Cisco Royalties is that they will put in US $5 million, so that's about 6.5 million Canadian into the company in exchange for a 1% royalty on NSR royalty on Cuiú Cuiú. So that's essentially the deal. The money is in two tranches, so we've already received the first tranche of $2.5 million US, and we expect to get the rest of it by the end of this month in July. So it's a bit of a transformative deal for us because it really does push the cash balance way up. Obviously, there's been no changes to the capital structure, so we're very, very pleased, and I think the reaction in terms of the share price has been very positive. The share price is up about 40%, so it's very good.
Right, but it's from a low base. I think there's still a ways to go for you because people want to hear what you're going to do with this. So obviously, 5 million in, you had like 2-3 there. So the cash balance is looking healthier now. You are in the process of doing a pre-feasibility study on the oxides.
Yep.
Does this fully fund that through to delivery? And if so,
yes.
When are we looking for this pre-feasibility to come out?
More than the completion of the pre-feasibility study, Matt. We're hoping to have that done by the end of this year, 2023, and that should form the basis of a construction decision. So this won't be a case of pre-feasibility study and then a feasibility study. It will be a very good pre-feasibility study with a lot of detailed engineering done over the next few months. So,
well, that's where it's going.
Time.
Well, it is an exciting time if we can sort of get a sense of what the output is and what the timing is. So you would make a construction decision off the back of this PFS. Why is that? Is it because the oxide blanket is, I guess it's relatively simple.
Yeah,
right.
It's relatively simple, and the project that we're going to start with will be a relatively modest operation mining this oxide material, and the capital cost should be very low on that. As you know, it's all free digging material, so we don't need this giant plant that's crushing and grinding material. We don't need a whole bunch of expensive equipment to drill and blast here because it's basically it's going to be an operation with front end loaders and excavators scooping this mud up essentially and stick it in trucks. We know this stuff leaches extremely well, and heap leach processing is obviously one of the lowest cost types of plants that you can actually put in, both in terms of the initial capital and then the operating costs. So we know this material leaches extremely well. So as I said, we are in transition from being a very successful advanced explorer that controls this massive district with lots and lots of upside to being a junior producer. And once we're in production, we anticipate, assuming of course the PFS is positive, we assume that we anticipate then, building up the production from a relatively modest base initially.
Okay, so I need to be clear with me. You said the oxide leach as well. So,
Yes.
So what work has happened? Remind me.
We've had metallurgical test work done at Caps Cassie, which is a company that has a lab in Reno, Nevada. I mean, they're probably regarded as the world's foremost laboratory for conducting these types of metallurgical tests, heap leach tests. As you know, a lot of big mines in Nevada recover gold through heap leach. And so the recoveries that came back from that initial test work was 82% of the gold basically can be recovered via this process. And there's nothing there's nothing new about this process. Like I said, it's been being done currently in about 300 mines around the world, including a number of big mines and small mines in Nevada. So and 82% is higher than virtually every other mine in that part of the world. So very, very good recoveries. We are doing more metallurgical work, and we'll see what the results are from that. But but we're very confident that it will leach very well.
Okay, so moving forward to a construction decision, end of the year, beginning of next, depending on.
I think the decision, Matt, will be let's get the study done. We are working on. Have a whole bunch of discussions going on with funding providers for this for the capital that we're required to build this. Obviously, having a healthy treasury now, which will more than cover, the completion of the pre-feasibility study gives us a certain amount of flexibility in terms of funding the trial mining project, this heap leach project we're talking about. It puts us in a very good position.
Well, let's talk about that, because I guess that's what might make people nervous in terms of, there's a big kind of capex, there's a big kind of fundraising required here. Like we've seen these heap leach projects done by Canadian public companies, 12 million through to 20 million bucks. Let's say you're there or thereabouts. Does that help you with discussions with, I guess, alternative financing rather than dilutive, pure equity financing for something like this? Because presumably it's kind of quick to production, quick to capitalize in terms of the gold coming out of the ground. So what are the options available to you? What sorts of people are you talking to?
Well, all options are on the table right now in terms of funding that heap leach project, and I think your estimate of the capital cost is in the right range. This isn't going to be a $50 million, $40 million, $100 million capex on it. It will be something I anticipate in that kind of range, but we don't know exactly yet. But all options funding are currently on the table, and we're talking to all sorts of different people, including potential joint venture partners that might want to come in and take a minority interest. We're not going to give up operatorship of this. But taking a JV partner is one possible route. They fund the construction and take a minority interest in the project. Streamers, so these are people that take a stream of metal in exchange for paying for the upfront capex on this. Gold loans, which is a similar type of structure where people loan you money and are repaid in gold. Straight debt, where it's like getting a mortgage on a house. There's obviously interest on the debt, security on that debt, etc., etc. Equity, you're right. We'll look at the current share price. We're not anticipating if the capex is in the range you just mentioned. At the current share price, we wouldn't be doing this as an equity transaction. We would not. So we don't want to blow the capital structure out of the company in order to get this done. All options are on the table, Matt. I can't tell you right now which one we'll actually land on, but we have a bunch of discussions going on, and we want to advance those discussions so that when we do get the results of the PFS, we can move fairly swiftly to make a construction decision, assuming, of course, the results of that PFS are positive.
Right, okay. And obviously, we like near-term production stories, especially in this kind of gold price environment. Very, very positive. And you're talking about a low capex solution for that as well. So, what are you talked about metallurgy, and you're saying the recoveries are quite good, and therefore it should be able to throw off a whole bunch of cash.
Yeah.
Right. Very good. Right. And that should throw up a whole bunch of cash. And obviously you've got a big district wide opportunity beyond, the oxides here as well. But, I guess the kind of question people are sort of leaning into, with regards to how you, develop things over the next 6 months will be, right, okay, metallurgy is good. What are the other things which are important for us to be able to judge you? What are the things that you're spending time and effort on?
Well, the PFS itself has a number of different studies within that PFS are going on. We are anticipating doing a little bit more drilling in the oxide material. We think we can improve the current oxide resource. We think there is good indications of more high-grade material. A small component of the current resource at Central, which is one of the two deposits we anticipate mining if this is positive, is inferred. So we want to do some infill drilling to upgrade that resource. Mine planning, metallurgical test work. We are doing some geotech drilling, as I said. We're about to kick off on some geotech work, some topographic surveys. So there'll be quite a stream of news, including drill results and met results over the next 2 or 3 months. We haven't had a lot of news over the last 9 months or so. As you know, it's been an extremely difficult market. It's been extremely difficult to raise money. But we are now in a position where we have a healthy cash balance, and we have more than enough cash to get this PFS done and arrive at the point of making a construction decision. So we're in a very good situation.
Well, like I say, it's been a tough market for all equities, especially precious metal equities. It would be nice to sort of see this moving through the phases quite quickly over the next 6 months. Stay in touch and let us know how you get on, Alan, okay?
Thanks very much, Matt.